All right, welcome back to Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Thanks for tuning in. If you're just tuning in, you can follow me on Twitter. That's the best place to see everything that I do. That's at Scott the Cow Guy, at Scott the Cow Guy on Twitter. And also, stick around for the show, right? We're going to talk a lot about what's been going on today. It's been a weird one, right? 1 o'clock Central, 2 o'clock Eastern, the Cow Guy closed. Love to see you there. Let's take a look at the corn table. Let's get it out of the way here. 45.5 cents lower in that SEP contract to 591.5. We're just going into the close here week. We're only a quarter cent, one tick off the lows. Deese is down to 582 3/4. That's 46.25 cents lower, and that is one tick off the lows as well. That's no bueno. Let's move over to soybeans and see how bad it is over there. 59 cents lower in August to 14.63 even. It's about 4 cents off the lows. I suppose there's room there. September, Novi new crop. Let's go to Nova. It's down 59 3/4 cents, 13.45 1/4, and again, that's all about 6 cents off the lows there. How about Chicago wheat? Wheat in Chicago. Let's take a look what's happening. September's off 40 cents, 816.5, penny off the lows. Go out to say March, get a little idea about what's happening out in the deferreds. 38 3/4 cents lower to 847 even. That is a new low. Hard red wheat in Kansas City, 47.5 cents lower in SEP to 867 3/4, a penny off the low. As you go out the deferreds, we have a 47 3/4 cent loss in that March contract. 879 1/4, and that is a new low. Ugh. All right, spring wheat in Minneapolis, 44 3/4 cents lower in September. 919 is last. That's about a penny off the lows. And that March contract's at 39 3/4 cents lower to 948 even, which is 3.5 cents off the lows. So it's not a new low. All right, that's something good. Let's see what's happening in. This is ugly actually. Cotton, we're limit down. 400 points lower to 90.84. Let's bring in Ted Seifried. Maybe he can make us feel better. He's with Zaner Ag Hedge. He's in Chicago. Thanks for joining the show, Ted. Well, the floor is yours.
Well, hi, Scott the Cow Guy. I'm at the Ted spread. Yeah. This was not a very bearish report.
Oh.
If you look at it and you look at the soybean number at 230 million bushel carryover. Okay, it was a little bit over what the trade was expecting, but the way we got there was by the USDA really ripping the Band-Aid off on the demand side of things, cutting exports 65 million bushels, and then cutting the crush 10 million. You can even argue if they're justified in doing that, especially with so many sales that we have on the books for new crop already. But okay, let's get that out of the way. Lower demand, fine. We're only at a 230 million bushel carryover, and that's at a 51.5 national average yield. You look at the forecast that we have for August, or even the last half of July, and you say, oh boy, that 51.5, that might not be there. And if you cut a bushel off of that, we're down to 150 million bushel or below. If you cut a bushel and a half off that, all of a sudden we're flirting with 100 million bushel carryover in soybeans. But the market doesn't care about that. Again, if you would have seen this report this time last year, I think we'd have been up 40, 50, 60 cents in beans. I think even if you'd have seen it 2 months ago, we'd have been up 40, 50, 60 cents in beans. But the market is acting so much differently to really everything, to weather forecasts, to everything. It's because of what's happening from an outside market perspective. We're talking about inflation, inflationary bubble burst, inflation off, recession on.
Yep.
All of these things are causing your big investors that have been long in these markets for a really very long time, 2 years for that matter. They are not only running for the door, but I think they're looking to get short. And I hope this isn't a 2008 scenario. But we have to go back and look at that very closely to see what happened the last time we had an inflationary bubble burst and where we ended up at the end of the year. At the end of the calendar year, we had a lot of things that were about 70% off of their June highs. It was amazing how we went from being super bullish to being ultimately bearish. And so, again, I don't think there's a whole lot of parallels. We're not having a big bank collapse, things like that. But inflation off is a real thing that has to be something that everybody is paying attention to and understands that it is something that we're trading here. It's not just a weather forecast.
All right. Hold that thought. We got to go away. We got to pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge after this. And now for the good news. How about this? Market Day Report. I'm Scott Shelby. Let's take a look at what's going on in the cattle prices. Live cattle. A good start here. This is not that great of news, but it's up on the day. We like to see those arrows pointing in that direction. August is up 47 cents in the live cattle in Chicago. 136.62 is last. About 38 cents off the highs. I guess that's good, right? We like February. That's up 50 cents to 151.90. And that's about 20 cents off the highs out there. So live cattle, steady better, as we would say. Not really putting on too much there, but here's another one that's a little bit better. Actually, a lot of bit better. Almost trying to have a 5 handle in front of these gains. $4.80 higher in August, up to 179.67. It's about 65 now. It's about 25 cents off the highs. That's a pretty good going. Go out the deferreds, even way out to say even November, it's $3.37 higher to 185.40, and that too is about 32 cents off the highs. How about lean hogs? Well, they're not doing too much, but we'll take it. You got to go all the way out to Feb to see a loss, and that's 15 cents lower in Feb live cat or lean hogs. We've got the August lean hogs up 42 cents to 108.80. So we're going to take that one and run. All right, let's bring back in Ted Seifried from Zaner Ag Hedge in Chicago. Ted, anything you want to get off your chest when it comes to livestock?
Like you said, we'll take it. We will take some green on the board, Scott. And finally, feeder cattle embracing the big break in the corn market, really trying to break out to the upside there in feeders, as I think they should. So that is good. Your live cattle, a bit of a muted response. You'd love to see more, especially with weights already being below the 5-year average, the really warm temperatures that we've got in the forecast, and again, the fact that feeders should be the leaders to the upside. So we're concerned about that. You see crude oil down, you say, hey, maybe we can spend more money at the grocery store. But because of this inflation off scenario, this climate that we have, there's just a lot of worry about what demand might be, regardless of crude oil prices and things like that. And as far as hogs are concerned, I like seeing that we're higher on the day. I think that hog contract might be the recessionary trade, because people are going to look for that cheaper cut of protein.
Right.
And relatively speaking, I mean, pork is really rather cheap compared to beef.
Right.
Maybe that's where a lot of people go, speculators and whatnot, for this recessionary trade.
All right, we'll keep an eye on that one. That's a good point. Thank you very much. Ted Seifried from Zaner Ag Hedge. He's in Chicago. We're in Nashville. I'm going to bring this one back one more time. I can't get that out straight. Throw this over to you, Suzanne. It's all yours.
Thank you so much, Scott. Of course, looking forward to the Cow Guy Close coming up at the top of the hour.